back to the show this morning. I'm Lance Roberts, Michael Lebowitz, CFA, joining me. So I wanted to finish up on our conversation about why whoever the next president is likely to be the unlucky one. And let me just boil this down into a real simple formula here. First of all, you've got very high valuations in the stock market, really kind of across the board, right? So ultimately, there is now a negative correlation between, we wrote about this in last weekend's newsletter, I believe. There's a negative correlation between the stock market and the economy. That's the first one that's existed ever in the history of the United States. Why is that important? Is because the stock market, right? Apple, Microsoft, Google, Abbott Labs, UNH, all these companies, they derive their earnings from where? The consumer. Where does the consumer live? They live in the economy. So there's a high correlation historically between the returns of the stock market and the growth of the economy. Makes perfect sense because the stock market is a reflection of the economy. The economy is going to be growing roughly 1.5 to 1.75% going forward here over the next few years. So again, when you start looking at the detachment from the market, from the economy, that will be a reconnect. So very likely in the next 4 years, we're going to have a fairly major market correction, particularly if Mike and I are right, talking about the Fed being limited in their options. Markets are going to run into trouble. That's not going to bode well for the current president. Very likely, we're going to have a secondary recession somewhere within the next 4 years because of the impact of what's happening underneath the economy, low wage growth, this idea of wanting more and more stimulus that will ultimately fail, lead to weaker economic growth. So pretty much, and I'm going to let Mike jump in with his few points here as well. But from kind of the view looking forward of where we are economically, where we are financially, where we are market-wise, the outcome. And again, it doesn't really matter who's the guy sitting in the White House. He's the guy that gets blamed for it. Right. So, you're walking into a situation to where the outcome of anything you do for the next 4 years will likely not be good. And you're going to get blamed for something that was already built, this excess that's been the excess debt, the excess leverage, the excess monetary interventions, all that's been building up for over a decade. And when that unwinds, you'll be the guy who gets blamed for it. Mike?
Right. The economic engine has been sputtering for the last 3 or 4 years, right? Mm-hmm. Even 2019, everyone fails to forget the Fed lowered interest rates in the fall of 2019 and started doing more QE.
Right.
During a quote unquote good economy. Right. The economic growth rates, if you look at the economic growth rates of the expansions after recessions, they are continually less than that of before the prior recession.
Right.
So what that's telling you is that something is happening during a recession that's softening the recession but costing us in the future. Now you look at what happened with COVID, and we had a flash crash, an economic flash crash mm-hmm. of numbers, data that we haven't seen since the Great Depression, in some cases even worse than that. And the amount of stimulus doubled that, which was done only 10 years ago. Mm-hmm. So we pulled forward a tremendous amount of consumption. We've at a cost of a tremendous amount of debt. The debt now has to be paid, and our needs to buy stuff in the future are less. And given that our car was sputtering already and stalling out at times, the future just does not look good. And the Fed's telling you in no uncertain words that there's not much more they can do. Mm. And all they can do is keep interest rates near zero so the Treasury just can keep buying economic recovery. Right. But, the fact is we didn't get a blue sweep. We didn't get a red sweep. So no one has full control. And with a split Congress and a very contentious atmosphere, this is going to be very problematic there'll be stimulus, but massive stimulus like that we thought we could see with a blue sweep isn't going to happen.
Right.
And every day it doesn't happen, economic growth is very suspect. Yeah. And this whole pull forward concept, we do it every year with the whole holiday season, right? What's Black Friday? Black Friday is the day that traditionally retailers become profitable for the year. Mm-hmm. So if you just look at kind of retail sales over the course of the year, they trend over time, they trend higher because of population is growing and all sorts of things, but they bulge higher during the last 3 months of the year, and they go lower during the first few months of the year. And that's pulling forward. You're pulling forward. You're giving everyone these gifts and getting gifts, but then you don't need that stuff. You don't need the new socks and new underwear and all the good things we get.
I wait all year long for new socks and new underwear. So let's let's just keep this in perspective, will you?
Right, but no one's buying underwear in January or February.
Right?
And that's what's going on now. We're pulling forward. This is our Christmas. This recovery is Christmas, and we got the next president has January and February and March. That's their term. Good luck.
And honestly, this is something that I've talked about for years on the show, is that I've been trying to convince my family to accept, paper certificates on Christmas Day of the gifts they're going to get in January when everything goes on sale. And, really, if we could think about running our economy this way, is like saying, look, we're going to have some really great sales on stuff in the next 3, 4, 5, 6, 7 months or a year. And we're going to try to navigate between here and there and put the economy into position to where we can get this stuff on sale and really put ourselves in a position to allow for a better recovery and be more fiscally responsible long term. Unfortunately, our government's trapped into the same mentality as I've got to have my gift on Christmas, right? My family will never go for the I'll get it after Christmas certificate, right? They want it on Christmas. But that's, this is the on-demand economy that we've created, right? Go into debt. It's no big deal, right? Just go into more and more debt. You can live your life today. YOLO, you only live once, right? So got to have it today, despite the fact of the fiscal irresponsibility has now led the vast majority of the population. 80% of Americans have less than 1 month of savings saved up. And we saw this during the pandemic. They ran out of money overnight. They got to have stimulus just to pay bills. And, we've fostered for the last 40 years, we've fostered this fiscal irresponsibility in the country, and now we're paying the price for it.
Right. And again, this has nothing to do with which party's in control. Right. I mean, this is much more of a problem today than it was in 2019 because we had another, it's not really a Christmas, but we decided as a country some time ago that recession should be outlawed, that we're going to do everything we can do to fight recessions. Well, there's a huge cost to that, and that cost is always in the future. And like everything else, as an economic country, as the economy, all we care about is today, is about expediency, about we can't have a recession. Who cares if we pay for it in the future or our kids pay for it in the future? But you keep doing that, and you run out of gifts to give, and that's where we're at.
Yeah, no, we keep hoping that the next generation will pick up the tab, and that keeps passing on, right?
And here's the other thing, which Bill Dudley actually alludes to, right? When rates are so low, what tends to happen is investors speculate instead of investing into productive ventures. Right. Productive ventures help pay the bills in the future. They not only pay off their debt, but they produce income and they grow. And it's not just the person that invested in it, but the people that work for that venture. And that's what helps grow society. But so many corporations too, they're buying back stock instead of investing, right? Yeah. They're all speculating. Speculating gets us nowhere as a country. It actually harms us.
Real quick here for the top of the hour, we're almost done here. I just wanted to ask your opinion. In 2016, in the Trump election, the pollsters got the outcome of the election so wrong. And this in 2020, all the pollsters says, "Oh, we amended our formulas. We adjusted our strategy. Blah blah blah," and they were even worse on their predictions this year than they were in 2016. Is the pollster business going to be dead now? I mean, is anybody actually going to listen to people like Nate Silver at 538 anymore?
So yesterday I put out my, on Twitter, if you follow me on Twitter, I put out my investment outlook for the next 4 years. Mm-hmm. And I have two big trades, right? Short pollsters and long coin tosses. Because I think a lot of pollsters are biased, and I think that a lot of things are changing in the way we vote and how we vote, and it's also very hard to predict. And they seem set on telling us what the outcome is, and they've been wrong now in many cases, just grossly wrong.
Well, one thing that I thought about is that, there's been such a backlash against, if you say, hey, I'm voting for President Trump, I mean, the backlash has been terrible on social media, Facebook. I mean, we have such a deep division between the left and the right, more so than at any other point in history of the country. And I know, and people that were voting for Biden, they were kind of in a safe haven, right, from the media. If they said, "Oh, I voted for Biden," they didn't get any backlash at all. But if you say you're voting for Trump, you get a lot of backlash from the media and from the other. I mean, is it possible these pollsters were going out and interviewing people, and people are going, "Yeah, I'm voting for Biden," when they were really voting for President Trump? They just didn't want the backlash.
Oh, that's probably going on too. There's all kinds of I think there's all kinds of things going on, and they're really hard to predict, but they're trying to be so definitive, plus and minus margin of 2%.
Yeah.
That's ridiculous given what we've seen the last. And there is a bias, and it's all the media outlets, conservative and liberal. They're all biased, which they start off, and the bias may not even show, but it shows in the way they collect the data.
Yeah.
How they collect it.
So next year we will be doing coin tosses on the show in the next election to predict the outcome. So anyway, that wraps up the show for today. Michael Lebowitz, CFA, thank you so much. Be sure to go by our website. His latest article is out right now on the website, talking about the Cobra effect, talking specifically about Bill Dudley and the impact, on the economy. It's on the website now, realinvestmentadvice.com. While you're there, get our latest policy over politics video webinar as well. Just simply type in politics in our search banner. It'll be there for you. Realinvestmentadvice.com. Have a great day. Send us your questions and comments. We'll see you tomorrow.
If I had a little money, it's a rich man's world. It's a rich man's world.